Let me start by saying this. The 4 AI stocks I'm about to show you today, they're probably not going to surprise you. These aren't hidden gems no one's heard of. But here's the thing, they are some of the most powerful players in the game right now, and there are a few huge reasons they deserve a spot on your radar today more than ever. It's 2025, and these companies, they're already giants. They're leading their industries. But this moment right here, this dip we're in, is presenting a rare window to invest in them at a discount that actually makes sense. Last year I liked all 4 of these companies, but back then their prices were sky high and just didn't feel like smart buys. This year though, 2025 has been rough on the market. That downturn has pushed prices down and valuations back into reality. And that's where opportunity lives. So today I'm breaking down 4 AI stocks that I believe are screaming buy me right now. Stick with me until the end because I'll also share 2 AI-focused ETFs that I think are absolute gold for long-term investors. Also, if you're wondering, yes, I still love Alphabet, Google, and Palantir. I've talked about them in other videos and I still hold both. But this time I'm focusing on 4 others I haven't highlighted much here. My name's Nolan Goa. Some of my students call me Professor G, and my mission is simple, to make investing simplified. Let's dive in. Kicking off with a name that probably sits at the very top of most AI watch lists, Nvidia. Now if you've seen the headlines, you know Nvidia's been taking some heat lately. There's been a lot of noise around US tariffs and restrictions on exports to China, especially for their cutting-edge H20 AI chips. In fact, the company recently announced it's taking a $5.5 billion financial hit because of those new export rules. That kind of news? It's been shaking out nervous investors and the price has dropped hard. But here's the thing, Nvidia is still the undisputed king in the AI space. No one's even close in terms of capability, especially with their GPU dominance. Last year, I was already a fan, but the price, it was too high. Now, it's a whole different story. As of now, Nvidia is trading around $104 with a forward PE ratio of 35. That's finally within a range where I feel comfortable stepping in. According to Investing.com Pro Research, Nvidia scores high across the board, strong growth, impressive profitability, and healthy cash flow. But what gets me excited is how their AI technology is being used across industries like healthcare, manufacturing, and smart infrastructure. This isn't just about graphics cards anymore. It's about building the next generation of intelligent systems. And get this, Nvidia's stock is down about 25% year to date. That's a rare discount for a company that rarely sees a true sale price. I'm definitely interested. Next up, another semiconductor powerhouse with a lot more under the hood, Broadcom. A lot of folks don't realize just how deep Broadcom has gone into AI. They've been building custom AI accelerators, tailored for hyperscalers, the big guys, who run massive AI workloads. And they've nailed it. They're also the backbone for next-gen networking infrastructure that powers those enormous AI data clusters. One of Broadcom's smartest moves recently was acquiring VMware, and it's paid off. Right now, 70% of the largest 10,000 companies are using VMware's cloud foundation to build virtual data centers and on-prem private clouds. That combination of hardware and software gives Broadcom a unique advantage in the AI boom. In the first quarter of fiscal 2025 alone, their AI revenue grew 77% year over year, hitting $4.1 billion. And they're not done. Management expects their serviceable addressable market in AI to grow to $60 to $90 billion by 2027. Even more impressive, they're just getting started. They already have 3 hyperscaler clients, and 4 more are testing the waters. Despite all that growth, Broadcom is trading at just 27.8 times forward earnings, way below its 5-year average of 70.7 times. That's a major value disconnect. Analysts are projecting 26.6% annual earnings growth, and at today's price of around $174, plus a 1.35% dividend yield, Broadcom is offering both growth and income. Oh, and like Nvidia, it's also down roughly 25% year to date. 2 AI giants, both on sale. Both. Alright, third on the list, and one I've never actually talked about on this channel, is none other than Meta. Let's talk about why data is the most valuable asset in the world right now. Not money, not oil, data. And guess who's sitting on the throne? Meta. Across Facebook, Instagram, WhatsApp, Threads, and Messenger, Meta has 3.3 billion daily active users. Let that sink in. There are about 8 billion people on Earth, and 3.3 billion of them use a Meta platform every single day. That gives Meta unparalleled access to behavioral data, and they use it with some of the most advanced AI algorithms on the planet. Those systems power their content recommendations, keep users engaged, and most importantly, supercharge their ad revenue. Their targeting is razor sharp, which gives advertisers incredible ROI. Right now, Meta is trading just above $500 and it's down 16% this year. And the real kicker? It's got a PE ratio of 20. For a tech leader, that's crazy low, especially for a company with this much dominance. Analysts from RBC Capital expect earnings growth between 15 to 20% annually over the long term, once their current AI investments begin to scale. Meta isn't just a social media company anymore, it's one of the biggest AI and data powerhouses on Earth. The last company on my list today is a little different than the others, but equally important in the AI landscape. Let's talk security. In a world where everything is going digital, keeping data and networks secure is more valuable than ever, and no one's doing it better right now than CrowdStrike. CrowdStrike uses AI-powered chatbots and automation tools to detect and respond to cybersecurity threats faster than ever before. They're literally using AI to fight hackers in real time. Their customer list includes 45 of the Fortune 50. That's not a fluke. CrowdStrike is the go-to provider for enterprise-level cybersecurity. And while most tech companies are struggling this year, CrowdStrike is up 9.36% year-to-date. That's rare right now. Their ability to grow within existing accounts, what we call land and expand, makes them stand out. They've got a sticky product, and it's only getting better. Before we wrap up, I promised you 2 ETFs that are heavily invested in AI and perfect if you want broader exposure without picking individual stocks. Here they are: Global X Robotics and Artificial Intelligence ETF, ticker symbol BOTS. This one holds many of the AI heavyweights, including Nvidia and others. It's focused on robotics, automation, and intelligent systems. iShares Robotics and Artificial Intelligence ETF, ticker symbol IRBO, a more diversified option with exposure to smaller and mid-cap AI innovators as well. Both of these ETFs give you an easy way to ride the AI wave without having to bet on just one company. So there you have it, 4 of the best AI stocks to consider right now, while prices are still low, and 2 bonus ETFs if you're looking for diversification. I genuinely believe that 5 years from now, anyone who invested in these names during this dip is going to look back and be very happy they did. If this kind of content helps you, do me a favor. Drop a like, hit that subscribe button, and let me know in the comments which AI stock you're most excited about in 2025. Until next time, this is Nolan Goa, Investing Simplified. While 2025 holds incredible promise, let's take a moment to peer even further into the future. AI isn't just a trend, it's a paradigm shift that will continue to evolve and reshape our world in ways we can't fully imagine yet. Emerging technologies like quantum computing, advanced robotics, and neural interfaces are on the horizon, promising to push the boundaries of what's possible. Market trends indicate that industries such as healthcare, transportation, and finance will increasingly rely on AI to drive innovation and efficiency. Companies that adapt and invest in these cutting-edge technologies are likely to see exponential growth. Imagine a world where AI-driven diagnostics can predict illnesses before they manifest, or autonomous vehicles that make traffic jams a thing of the past. The potential is limitless, and the AI stocks we discussed today are just the beginning. As investors, staying ahead of these trends can position us to capitalize on the next wave of technological advancement. The future is bright, and the opportunities are boundless. So keep learning, stay curious, and continue to invest in the future. Thank you for watching, and until next time, this is Nolan Goa, Investing Simplified.